welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, in this edition, we are extremely privileged to have with us Professor Arvind Panagariya, the first Vice Chairman of the NITI Aayog and presently Professor of Economics at Columbia University, US. Welcome to the show, Arvind. Thank you so much for joining us in ET Now. Let me start by asking you, how bad is the slowdown? We've seen various multilateral institutions and brokerages successively lower their GDP estimates for the year. Just recently, Fitch India has lowered its estimate from 6.6% earlier to 5.5%. What is your estimate of the GDP growth likely this year?
Well, I think you can assess that by the numbers that people are giving you. But it is a slowdown, and anywhere between 5.5% to 6% is where it looks to be landing for the 2019-20 year, and we have to wait and see. Remember, always, I was joking very recently with somebody that when IMF put up a point, this figure of 6.1%. If one actually were to go by what you hear in the Indian press, you would actually think that a minus sign is missing from the 6.1%. So media sort of also focuses only on the negative very badly, because at the end of the day, 5.5% is growth. It's not a decline.
But should we discount the GDP number about what I'd like to call the Arvind Subramanian discount factor of 2.5 percentage points, Arvind?
Well, if you believe Arvind Subramanian, then you should discount. I don't. So I don't discount. I have full faith in the numbers that we calculate and we estimate. Nobody, including Arvind Subramanian, has given anything in the methodology itself. They all do their regressions, as if regressions are going to estimate the GDP of a country. And of course, even if you want to go by regressions, there is a paper that has just come out by a professor by a chaired professor of finance at the University of Michigan, which completely disagrees with the econometrics of Arvind Subramanian, and he says that when you do the econometrics right, then there is nothing wrong with the numbers.
What are the contributory factors to your mind? There's been a great deal of debate in India about whether the slowdown is cyclical or structural, global or domestic. How do you see it?
Oh, most certainly, it's a combination of the two. Most certainly, it's a combination of the two. I'm not very good myself about at seeing the cyclical factors, but the structural factors I can begin to kind of understand a bit better. There are two major factors at work here. One is the financial markets. The problem started in banking, but we also see this in the non-bank finance companies. So the credit is a problem, both on the demand and supply side. A lot of the large borrowers have their balance sheets in bad shape because a lot of the NPAs are sitting on their balance sheets. And on the bank side also, now they are being much more cautious in lending money. The business of lending from a phone call from the government is over. And the banks now see that it's going to be much harder to make a case for continuous recapitalization in the way they have done before. The RBI rules have also tightened up a bit. So all those factors from the financial market, that's one factor. The second, I believe, is that also the Prime Minister's fight against corruption, the anti-corruption campaign, is changing the way you can do business. I think a lot of the things that you were able to do in the past, you no longer can do it. And so the industry is having a bit of a hard time adjusting to the new rules. And that too, I think, is making the industry much more cautious. Those factors are impacting the investment activity.
Yes, the banking sector mess is an important contributory factor. In fact, you were one of the earliest advocates of a bad bank, a suggestion that the government then chose to ignore. In hindsight, was that a big mistake?
Well, I don't know. I think the big mistakes, of course, happened much earlier when these loans got given based on phone calls from the finance ministry, and that happened, from all the way from 2006-7 around then to 2014. But I think the RBI itself was also very slow to take up the cleanup job. When I came, the then governor of the RBI had no interest whatsoever in beginning the cleanup process. Instead, he went on to do these things like the different mechanisms to refinance the loans, right? The S4A, 525 scheme, bunch of others. I sort of call that alphabet soup. I think that was already the time that the central bank should have gotten on to the task of cleanup, and the government, of course, as well. The government was also slow.
Structural reforms are often advocated as an answer to the slowdown, but reforms in factor markets like land and labor entail short-term pain. And as we've seen with the Insolvency and Bankruptcy Code and GST, there is some short-term pain. So, do you see the government going in for such reforms, especially after the reversals that we've seen in the recent state elections, Arvind?
Well, I think that the government has never been in a better position to do these more, maybe a little bit more painful reforms, at least in the very short run. Although that's not necessarily so, actually, even in the short run, these reforms could in fact help the country. But in the long run, they will certainly do so. And the government does have majority in the Lok Sabha. It doesn't have majority in Rajya Sabha, but it looks like it has the votes, or it will soon have them. So I really think that this is the opportunity to do major structural reforms. Prime Minister, I know, is willing to take every risk. There is no doubt in my mind about that. Where I see the problems are, it's within the bureaucracy. That you need somebody within the bureaucracy to be the champion of reforms. The problem arises, that when you look at the ministries, are there champions of reforms in labor ministry? Are there champions of reform in rural development ministry, where the Land Acquisition Act ought to be reformed, or at least that's where it ought to originate? That's where I think, because the Prime Minister himself can't write the legislation. He can provide the political cover, but ultimately the legislation drafts have to come from the ministries. I mean, I saw this very clearly during my days in NITI Aayog, that the Prime Minister, when he gave us to do the National Medical Commission Act reform, we were all in NITI Aayog very reform-minded, and we struggled hard. So from within, then we pushed, even though the legislation really should have come from the Health Ministry, which it did, of course. But the Prime Minister gave us the mandate to work with the Health Ministry, and until it was taken up by the cabinet, and even after that, when the parliamentary committee actually looked at it and so forth, we continued to push for a version that will remain a reformist version, because there were a lot of efforts to derail what had been originally proposed. So you need the champions also in the ministries, and that's where I think I sometimes fear that we probably don't have that.
Yes, you're right. Bureaucracy has been resistant to change. But GST and IBC are two reforms that were supported by the bureaucracy, and yet they haven't delivered. Why?
Well, again, I mean, particularly on the GST, the bureaucracy did, slow it down, and the implementation was not quite what it could have been. A lot of the problems that were faced could have been anticipated. They were not entirely unanticipated. And I sort of, the first one to say that it was a very complicated reform, so I'm sort of all kudos to the government, which actually managed to, amend the constitution, bring in two legislations, bring together the 29 states, and so forth. That being said, I think a lot of the, getting the GST network in shape on time, having a clearly, a system that would be friendly to the users and so forth. I think the bureaucracy did fall quite a bit short there. Not on IBC, the problem we are facing is in the judiciary, meaning not enough speed. So the legislation is great, but again, the hurdles are of speed. And although the legislation says time bound, 270 days, there are lots of cases which have been delayed. So there is an issue here also when it comes to implementation of the bureaucracy.
Inflation targeting was also an important structural reform. In hindsight, was that a mistake, or does the problem lie more in the way the MPC has interpreted the inflation target?
I've always maintained, I've been always on the downside of the inflation, that I'm much more tolerant, and so the 4% target plus minus 2%. So it's between 2 and 6%. But evidently the MPC seems to get very sort of nervous the moment the inflation begins to get to 4% or a little above. And so the target gets interpreted as 4% or less. And I've written about this. I've said actually that let's revise this target. I think having target is very good because we cannot let the inflation get out of hand. But relative prices need to adjust. And to the extent that nominal prices have some bit of rigidity, downward rigidity, the adjustment can only come, relative price adjustment can only come from rising prices. And so when you compress the average to below 4%, you are left with very limited room. That being said, I think some of the pressure on inflation itself is coming globally. There is a whole issue in The Economist this last week, which talks about it, that there has been practically a death of inflation. Ours is not so low as in the industrial countries, but I think it is low, and I would say that I would have not any hesitation today in revising the target up a little bit.
Whenever one talks about a slowdown, the choice has always been fiscal and monetary levers. There is a view now that monetary policy has run its course and it is now the turn of fiscal policy. Do you agree with that assessment, Arvind?
No. First, I don't think the monetary policy has run its course because if you look at the real interest rate in India, it is still significantly higher, meaning inflation-adjusted interest rate is significantly higher. And of course, you also have to look at the lending rates themselves because there is a gap between repo rate and the lending rate. So I don't think that we have run out, the monetary policy has run its course. There is room. And even the last time around, I had said, knock it off 50 basis points. The RBI in the end did 35 basis points, which was a compromise. And I believe in both. Got to use as many instruments as you got. It's not an either-or choice ever. On the margin, each instrument has to be used, and fiscal policy to some degree will kick in by virtue of the fact that the corporate profit tax has been reduced dramatically, and there is an automatic stabilizer that when slowdown happens, automatically the tax revenues decline, which works like an automatic stabilizer.
How important, to your mind, is adherence to the fiscal deficit target?
I still believe actually that government should remain fiscally prudent, fiscally restrained. So my solution on this that I have suggested is that this is a good time for the government to go out on a very aggressive program of privatization of public sector enterprises. Because this is killing at least two birds with one stone, if not more. You basically retain your fiscal discipline while also improving efficiency of the economy. And if you want a third bird, it also sends a very strong signal of the determination of the government to move ahead with structural reforms. And privatization is clearly very important. Also, I feel that in recent years, the play of the government, the canvas on which the government has been painting has become wider and wider. A lot of social spending schemes have been launched, and it will also help the focus that where no public interest is impacted by the government exiting an activity like steel production. What difference does it make to the public whether it's done in private sector or public sector? If you move it out of public sector into private, no public objective or no public welfare is sacrificed on account of that. In fact, it is improved because the profitability is significantly higher in the private sector, meaning the efficiency, right? Ultimately the prices are the same, but you have higher profits because you are more efficient in the private sector. So that also creates the correct division between the public and private sector. We are no longer in the world where we said that we want a socialistic pattern of society. At that time, in fact, increasing the share of the government in investment was itself an objective. But since 1991, we have adopted the market economy. And therefore, I think it is time that we continue to move on that path.
You spoke of aggressive privatization. So, what is holding the government back?
Yeah, well, I think, in terms of the disinvestment itself, the government has accelerated dramatically in the last 5 years. The numbers are, that far more has been disinvested in the last 5 years than in all the previous years since we started this process. But it is a strategic disinvestment.
Yes, I agree. The numbers for disinvestment are reasonably impressive. But these were more in the nature of what I would call sham disinvestment. One PSU buying into another. Would you agree with that?
Look up your numbers. Look up your numbers. Don't call it sham. But you have to go back and see what did the entity that purchased it did with it. It's still getting this out of the government's hand is important. And don't go by one example or two examples. Even if you exclude the ones where you feel that this is one public sector entity buying another public sector entity, exclude those, you'll still find that the total disinvestment in the last 5 years is more than what you did since 1991. To get your numbers correctly, I've looked at it and I'm convinced that a lot more got done actually during this period. But the real kind of area in which the progress has not happened is the strategic disinvestment. And this, in my view, again, is a bureaucratic inertia. It's a bureaucratic inertia because Cabinet has passed it. Cabinet, from Air India to large number of public sector enterprises, which even in my time from the NITI Aayog we had recommended, were passed for privatization by the Cabinet. Where it did not move was in the DIPAM. The process remained stuck in DIPAM. Now I see very healthy signs. I think there are multiple reports which I see coming on a regular basis that the process is actually progressing. So I think I'm sort of still hopeful. I'm an eternal optimist, and unless we economists are optimistic, we will never work for policy.
In a recent piece, you had argued against government intervention in the context of the auto slowdown, saying, and rightly so, that Indian industry must learn to be competitive. But ultimately, government came out with sector-specific stops. Do you think this will move the needle on growth?
Yeah, no, I maybe some small little things here and there for auto directly. I think most of what the government has done is regardless of the sector. So I mean, small things may have happened that the government will start buying more automobiles or something, or something on depreciation which may have been specific to auto, but largely I feel that the government did the right thing, which was not do specific for specific sectors, but more kind of broader measures which would apply also to auto sector. And I still lean on that approach. Otherwise, you send very bad signals that anytime there are losses, the industry can come in and say, I'll let the tax revenues pay for my losses. What kind of private economy is that? If you're a private entrepreneur, you have to learn to take your losses just as you enjoy your profits. So I see no reason whatsoever for the government to start bailing out in this manner. The government has to naturally come out, and where there is a systemic issue, and so in the financial sector like banking, the government had no option. I think the government had to recapitalize. And the lesson I take from that is that it is time to start thinking very seriously about privatization of the banks also, because at the end of the day, if I compare what happened in the private sector banks and what happened in the public sector banks, there is night and day. I'm not saying there's no problem in the private sector banks, but when I compare it to what happened in the public sector banks, private sector banks actually overall were far more responsible, and the government did not have to spend a penny to rescue any of the private sector banks so far.
Well, we have seen a dramatic improvement in India's rank in the ease of doing business tables, but private investment is still not picking up. Why?
Look, this is very short run, and what I mean right now, the improvement that you're seeing in the rankings is from the actions that happened over the last 1 year. So it's not that it's not going to yield impact, but on the margin it will yield impact. But there is a slowdown going on, so it's a negative dominating the positive. But to me, it gives hope that good work that needs to be done to improve the processes is being carried forward by the government. And certainly, look, I mean, a lot of skepticism in the media and all. But you compare the 10 years that happened under the UPA and 5 years that happened under the present government, this government is so much more responsive. And to my knowledge, I can hardly think of any mistake. There may be problems of omission, that things that should have been done were not done. But certainly nothing that this government has done is something that I would say, oh, now this needs to be reversed. There's plenty of things, from the UPA too, where I need a reversal of what was done by the government. So progress is happening. What we have to do is, keep the pressure up for more reforms. And I have absolutely no doubt that, once the problem, particularly in the financial sector, gets sorted out, it may take a little longer for the businessmen, for the enterprise entrepreneurs to sort of learn fully or internalize the change of culture that is happening, meaning as a result of the anti-corruption campaign. But I have no doubt that in another year or two we would get back to 8% growth.
Yes, I'd agree with you that the government has initiated a number of reforms, but we are seeing now a distinct shift to the old socialist ways, whether it is in terms of the loan mailers or high import tariffs. What explains this shift to the past?
Yeah, okay, I should correct my earlier statement a little bit. You're right, actually, that on imports, on trade policy, I think we did go back a bit, and that's one area in which I would like a correction. I believe that in the second term, the thinking is beginning to change, as we have seen also that the policy of a strong rupee has now given way to an appreciation for a weaker rupee rate as well. So there, I think on the exchange rate, we do, by all signals that are coming from the government, I certainly see that there is a difference in thinking in the second term. And I'm very hopeful that we'll see some movement on trade side also, including, hopefully, conclusion of some of the trade agreements. Certainly one is seeing some very positive reports with respect to the RCEP. This is the large free trade agreement that we have been discussing with our Asian partners. So I think on trade side, I should say that we need to be a bit more cautious, and more progress is needed. But that's one area, but the only area that I think where things did not go in the right direction.
Let me now shift to trade, where there are two main issues to my mind. One is the US-China trade wars, and two, RCEP. Are industry's fears on RCEP exaggerated?
Yeah, I think if Indian industry also needs to shape up. Look, I'm old enough to remember 1990s when everybody was saying that, oh, let's not open up to the external markets. let's first learn to compete within our own market and all. At the end of the day, the government was very sensible, both the Narasimha Rao government and the Vajpayee government that followed, and they continued to liberalize. In fact, even UPA-1 had continued that process till 2007, and the economy came out much stronger. There were a lot of predictions of doom and gloom that the industry will be decimated by imports. And just imagine what we did at the time. The top tariff rate in 91 was 350%. Average of the tariff rates was 160%. We went down by 2007 to the top tariff rate going to 10%, with some exceptions like the auto industry and textiles and so forth. So the average, but even average came down from 160 to 12% for industrial products. And the economy came out so much stronger that, our exports, which were about 50 billion, this is merchandise exports. So they were 50 billion in 2003 or 2002, became 300 billion in 2011. Six-fold increase. So I think, these fears that somehow we can't compete and therefore we have to be factually protected is false. And you can never import anything more without exporting. I mean, you've got to pay for what you import. How are you going to pay? That you do it by exporting. So to think that only imports will come as we open up is a fallacy of the first order.
Well, that's a welcome vote of confidence. Well, I'm afraid we ran out of time completely. So thank you so much for taking our time to speak with us. It's always a pleasure to speak with you, Arvind. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at TT Now.